On behalf of Batliwala and Karani Securities, we welcome you all to IDBI Bank Limited 3Q FY21 post-results conference call. We have with us today the management of IDBI Bank Limited, represented by Shri Rakesh Sharma, Managing Director and CEO, Shri Samuel Joseph Jebraj, Deputy Managing Director, Shri Suresh Khadanar, Deputy Managing Director, and Shri Ajay Sharma, Executive Director and CFO. I would now request MD and CEO sir to start the call with his opening remarks on 3Q FY21 results, post which we can start the Q&A session. Over to you, sir.
No presentation. So thank you very much and welcome all the participants to this investors conference. So I'd like to mention that there have been two developments in the current quarter for IDBI Bank. One was that we raised equity through QIP route. It was 1,435 crore, and total investors, 44 investors had come, including 12 FII participated in the QIP. And second was that we have completed the transaction for sale of IDBI Federal. 23% stake has been sold to AGS, our existing partner. Now we hold 25% of the equity of this subsidiary. Now, based on the performance, of course, briefly I will cover that the bank has recorded a profit of 378 crore as against loss of 5,763 crore during Q3 of last year. And there has been overall improvement in all the parameters. The PBT has increased by 12% YOY, and the operating profit has increased 28% YOY. It was 1,639 for the quarter. Then NII has also, there has been a growth by 18%. And more important is that net interest margin, that it has improved by 60 basis points to 2.87%. So basically, it has been possible to improve the performance by overall all the parameters, not only improving the other income part, but also the making good recoveries containing slippages. And as far as the business performance is concerned, the CASA ratio was 48.97, so almost 49%, which is, I think, the highest for IDBI Bank so far. And there has been, of course, little slow growth for the structured retail assets. 1.93% was there, whereas last year we used to grow by 8 to 10%. So this year, basically, it was a strategic decision, intentionally, that we wanted to consolidate, especially in view of the uncertainties attached for the COVID. We thought it is better to consolidate our portfolio, and then the growth can be in the range of 3 to 4%. But the next year we can grow as we were growing in the last year. So as a result, the growth focus was less. But yes, during the current quarter we have consolidated our position. In fact, initially there were certain doubts that our moratorium was almost 47%, 48%, how the assets will behave. So, but if you see the slippages, of course, because of that Supreme Court decision, there were nil slippages were there. But if you take the pro forma slippages, it was 1,294 crore only. So, keeping in view the fact that this 1,294 comprises of all the sectors. The retail SRA, where 48% moratorium was there, it is only 400 crore, which is more or less equal to what it was there before pre-COVID. So that is how coming back to business, although CASA 48.97 was there, but we have been able to show tremendous growth in the saving bank accounts. It was 14.58%, so which is a stable deposit. Current account, of course, there was certain decline because it's more volatile, but overall there has been growth of 5.69% in the CASA deposits. And the cost of deposit has declined from 5% last year, 5.02 to 4.18. So mainly due to reduction of bulk deposits and reorganization of our deposit portfolio, we have been able to reduce the cost of deposit, and that is how the NIM has also improved, despite the fact that the advances there is not much growth. Now, coming to the again asset quality part, as I was indicating that this 1294 crore was the pro forma slippage, and our guidance for the year was that our slippages will be contained within 2%, and I maintain that guidance. Now this third quarter basically slippages are known. Fourth quarter also more or less it will be either in the same line or lower than that. So that way we will be able to contain the slippages below 2%. And credit cost, our target was to contain below 2%. In fact, it may be below 1.5% also. So that way, the profitability parameters overall, there has been consistent growth is there. Although because of the Supreme Court stay, this pro forma NPA, and while our net NPA has come down to 1.94%, if we take pro forma NPA also, it was 2.75%, and our provision coverage ratio, in fact, it is the highest in the industry, 97% we have reached. Even if we take this pro forma slippage level, it will be 95.90, which is again the highest. So that way, we have been able to contain the slippages. We have been able to make good recoveries. This quarter recovery was 961 crore. Overall, we have been able to recover almost 2,800 crore during the 9 months. And our target was around 4,000 to 4,500 crore. I maintain that target. So during the current quarter, I think we will be able to maintain to record a recovery of around 1,200 crore. This will be through various sources, through some NCLT cases, and through some maybe assignment of debt or maybe one-time negotiation settlement. So, but 1,000 to 1,200 recovery we are expecting during the March quarter. So overall, it will be in the range of 4,000 crore. And these SMAs also have been under control. In fact, if you see our collection efficiency ratio, so pre-COVID it was 94.5%, post-COVID also it is 94%. So as I was indicating that the apprehension was about our high moratorium, so that apprehension is gone. We were quite confident that we will be able to maintain that recovery and collection recovery ratio. And this is now, I think we are quite happy to tell that the SMA level, it is basically around 6.4%. So that way only 94%, so 94% that recovery we have been able to maintain it. Now if you see the pre-COVID level of retail SMAs, it was 5,200 crore, which is now 5,800. So slight increase is there, there is not much increase. Even this slippage is, as I said, that 1,294 crore. So that way I think the apprehensions which we were there earlier, so now should not be there, and we are on the right track. Now, as far as the provisioning, as I had indicated, 97%, but apart from that, we are holding very good, provision under the COVID provisioning. So, like 706 crore provision we had made till September. So it was 436 was mainly for that NPA provision and 270 for the restructuring provision. So during the current quarter, we have so far done around 700 crore of restructuring. So this 700 crore, that additional 70 crore, we have not used that out of 270, but 70 crore additional provision has been made. So this and the remaining restructuring in pipeline is around 2,200. With that, the total restructuring which is going to happen is around 2,960, so maybe roughly 3,000 crore, which is around less than 2.5% of the total standard asset portfolio. So originally we had estimated that our restructuring under that RBI guidelines may go up to 5 to 6%, but that shows the quality of advances is good, so that the collection is good, and the restructuring will be restricted to less than 2.5%. And in fact, in retail, if you see, it will be only 1.8%. Whereas, total large corporate, it is 1,801. 800 crore, and retail advances around 1160 crore. And as I said, we hold adequate provision under COVID. Apart from this, that 70 we have already done, 270 we are continuing, 436 crore which we had made for NPAs we have not touched. In fact, in addition to that, for pro forma NPAs we hold 285 crore of provision, which is held in standard provisioning, and 84 crore interest also we have reversed. So there is no carry forward of any backlog. So in fact, rather we are having more than the sufficient provision. So with that, one more last thing I have to say, the capital adequacy and the PCA. So capital adequacy, as we had raised capital during the current quarter, so my CET1 was 12.22 and the capital adequacy at 14.77%, which is quite robust, and I think with this we will be able to show 8 to 10% or 10 to 12% growth next year also, and no more additional capital may be required, because already for 3 quarters we are carrying a profit of 800. So this, and then additional some March whatever profit comes. So with that we will be able to meet the capital requirements. So and as far as PCA is concerned, we are now complying with all the terms. For the last 4 quarters we are in profit. As far as NPA is concerned, as against the 6%, our net NPA is 1.94. Even with pro forma slippages, it is 2.75. So that way it is there. And LIC synergies are working out well with us. So now the way forward, basically, the last thing which I will like to mention is that now our target will be that improve the net interest income, and once we are out of PCA, although at present our core portfolio is 60%, but we are targeting same, that whatever I had indicated earlier, 55% retail, around 45% corporate. And once we start growing, so the operating profit also will improve, and we want to maintain the growth of 10 to 12% next year. And the ROA and ROE, presently for the current quarter, of course, ROA is 0.51%, but full quarter it is 0.38. So this year we are expecting around 0.4% ROA we should be able to achieve, and next year 0.65 to 0.7 we will be targeting. And then of course there will be focus on recovery will continue, and as I earlier indicated, credit cost and slippage ratio will be less than 2%, and NPA, of course, we had indicated that it will be less than 3.5, but we have been able to contain it below 3. So we will try continuing that for the current year less than 3.5, but from the next year less than 3, and 22-23 less than 2.5%. So with that I will stop my presentation here, and we will go for the question answer session. So thank you very much. Thanks for the patience hearing.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is from the line of Rahul from Centrum. Please go ahead.
Yes, sir. I wanted to ask, what is the collection efficiency in December and November? And also, if you could share the restructuring number.
The collection efficiency, as I indicated, after pre-COVID, same, it almost continues at the pre-COVID level. Pre-COVID it was 95.5, now it is 94%. So we don't see much significant change in that. As far as the restructuring numbers are there, as I had indicated, total restructuring numbers are 2,960 crore, which amounts to less than 2.5% of my standard asset portfolio. Out of that 2,960 crore, 1,160 crore is for retail and 1,800 crore for corporate. So So it's total like this. Out of this 2,960, 700 we have already completed up to 31st December. Remaining 2,256 ICA, the restructuring has been invoked. Hopefully this will be completed during the current quarter.
Sure. Okay. And also on this PCA, which you are indicating that you are meeting the threshold 3, so can you come out of PCA without meeting threshold 1 and 2? How does it work? Please explain to me.
No, like PCA, as you see, there are the total parameters. Issue the capital adequacy and CET. In fact, we are much above the mark. As against 11.5% capital, we are 14.77. Net NPA also it's less than 6%. We are at 1.94, and with pro forma 2.75. Then leverage ratio also complied with. Now profit only, this ROA should be positive. Now for the current year, last year of course although March quarter we made a profit, but full year it was a loss. But this current year, 3 quarters we are already in profit, and the average my ROA for 9 months works out to almost 0.38. Of course, for the current quarter, 0.51. So with this, continuous profit of 4 quarters, hopefully we should be out. But ultimately, the decision has to be taken by RBI.
Okay. Sure.
Thank you. The next question is from the line of Maruk Adajania from Elara. Please go ahead.
Hello, sir. Congratulations. Sir, I had 2-3 questions. My first question is that do you see any revival in CAPEX? Are you getting any such proposals from corporates which indicate that CAPEX would revive, say, over the next 6 to 7 months?
Thank you, madam. One thing, of course, before I reply to your question, since we are under PCA, so we are doing corporate advances only up to new proposal up to 15 crore and existing proposals up to 25 crore. So first hand, I will not be able to, the experience. But generally what we have seen in the market, so new CAPEX, as you see, it's not coming basically. So now I think once this now the vaccine has come, the fear of this COVID is going on, life is coming back to normalcy. So hopefully the things should start improving, and after the budget. So hopefully because without new investment, new infrastructure development, new capital investment, the economy cannot grow. So with that naturally some investments will have to come. So once that starts coming, of course, by that time we should also be out of PCA. So we will also start participating. But as I indicated that our ratio will be same, that corporate 45% and retail 55%.
Got it, sir. Thanks. Sir, my other question is about bad banks. There are too many talks about bad banks. So, are these talks real? Have you heard anything? Is it likely to happen soon, or is it going to be a long-drawn proposal again?
I think a lot will depend on what direction the budget gives coming Monday, because there are too many discussions, too much confusion also. The previous proposal as was proposed by IDBI didn't find favor with the government then, but there seems to be some traction now, so we will have to wait for the budget.
Okay. So the IDBI has already put forth the proposal, is it?
Again, what is being discussed in the press, there could be a proposal from the government to set up a bad bank. Beyond that, we are not privy to any other information. But going by press reports, there seems to be a case made up for a bad bank. We are not very sure.
Okay. Got it, sir. Thank you.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Congratulations, sir, on a good set of numbers. My query is, as you have already highlighted the restructured amount to be approximately 3,000 crores. And if I simultaneously see the provisions on the restructured, which is approximately 340 crores, so minimum requirement of 10% is already been taken care of. So we don't expect any such no more provisioning on restructuring assets, right?
Right.
Understand, like, okay. So on secondly, with the pro forma also, on the pro forma slippages of 1,300 crores, we have already taken care of 285 crores. So we have excess COVID provisioning roughly around 440 crores. So can we say could be reversed in FY20, not at least in Q4, but can be utilized or reversed in FY22 if the asset quality, as we have suggested, should see the improvement going ahead?
First of all, thank you very much. Like you have rightly indicated, number one, this restructuring provision that already we have, this is more than sufficient to take care of my provisioning requirement, number one. Number two, that 436 crore, basically, that as per RBI guidelines, this provision can be used for making a provision, like, this 1294 crore was there, so that it could have been used. But we have decided not to use this provision, and in addition, we have made 285 crore. So this, as per existing RBI guidelines, this March, basically, we will have to use this provision. But if RBI changes some instructions, then we will accordingly abide by that. But as of now, what the instructions are, that this has to be utilized in March. And in March, it can be utilized against any provision, rather whether against aging provision or the new NPA provision or any other provision. So as of now, the things stand like that. And accordingly, we will go ahead.
Secondly, sir, on the SMA position, as we have seen slightly increase from Q2 to Q3, there has been a slight increase in the SMA position. So, and you have already done 700 crores of restructuring and 2,200 crores of pipeline. Can we see this 2,200 crores is a part of this SMA 012 book of 7,800 crores?
Partly, yes. Partly. One thing, like, first of all, yes, as you rightly say, that it has slightly gone up. But one thing we have to keep in mind, that, the moratorium was available up to 31st August. So that is why in September number, this SMS was not properly reflected. So we have the YOY, if we compare with pre-COVID time, that time it was 7,894 crore, and now it is 7,860. So more or less, as I had indicated earlier, my collection efficiency is more or less equal to the pre-COVID level. So that way, it also reflects here. Now, as you rightly said, that 2,349 crore is my SMA 2. So partly, yes, it may be there, and partly, the exact number, of course, because these are all small cases. Exact number, because partly some of the accounts, like in corporate, who have opted for restructuring, they are not even SMA 0 also. But since they have been affected by COVID, they have also opted. Some of them are in SMA 1 now. Some they have split. So partly it is, split over various.
Some overlapping is there, but maybe we can't put you an exact number. But yes, definitely it's a good sum which is overlapping.
Okay, sir. That was very helpful. Lastly, on the PCA part, as you have last quarter also said, you have submitted all the documents, or the regulatory part has been already provided from your side to the RBI. Only the RBI now discretionary to move out of the PCA. Any reply from RBI or any thought process you can share on that?
No, as such, but normally it is customary that after every quarterly results, we inform RBI. So after this result also, we will send letter to RBI that these are our performance numbers. So based on that, of course, they may take a view, but ultimately, as you know, this RBI's prerogative. So let's wait for their decision.
Lastly, one data point, if you can share on the ECLGS scheme, how much we have disbursed up till December? Which scheme? Credit guarantee scheme, which you have given in the presentation. Is it the final number up to December 31st?
So about 2,000 crore we have disbursed already.
Okay.
So both under both the scheme put together.
Okay. Sir. That was very helpful, sir, and best of luck. Thank you.
Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, please press star and 1. The next question is from the line of Sunny Saigal as an individual investor. Please go ahead. Sunny, your line is unmuted. You may please go ahead with the question.
Yeah. Thank you so much, sir, for giving this opportunity. So I have a couple of questions. The first question is on the restructuring. So you said that you have already done restructuring to the tune of 700 crores and another 2,200 crores is in pipeline. So if you can just give some sectorial flavor on that, I mean, what are the major sectors from which this restructuring requests are coming?
Major sectors basically. I have a breakup of large corporate around 967 and mid corporate 834. So total 1800 is there. So sector wise, can you indicate just? It is spread over. Actually, it is a retail
across all industries, sir. Actually, not specified. But majorly it is coming from engineering and food processing industries.
Engineering, food processing, and some large retail. EPC and.
Okay. Are there any lumpy accounts? I mean, like big accounts there?
Now, like, of course, in large corporate, total 8 accounts are there. Out of that, 2 accounts, the overall exposure from the bank is overall all banks, less than 1,500 crores. Only 6 accounts are there, which are more than 1,500. But we are not the leader, so though we are only having small shares. So as you will see, my total exposure only 967 crore only. So although there may be some bigger accounts are there, so total 8 accounts in large corporate and roughly around 8 corporate accounts in mid corporate also. Remaining all are retail. 9 accounts in.
Okay, thank you so much. The next question is on the interest reversal. So have you done the interest reversal completely? I mean, there has been a slight uptick on the names. If I see, I mean, 6 months vis-a-vis 9 month basis. So the name has gone up from 2.76 to 2.79%. So is this including the interest from pro forma or the interest from pro forma has been reversed as of 3Q?
If no, like if I have understood your question properly, one is that interest on pro forma NPS, whether it has been reversed. Yes, it has been reduced from the overall net overall interest income. So that is around 84 crore which we have indicated, that has been reduced from the overall interest income.
Yes, sir. 84 crore has been reduced and the NIM has been worked out after that only. The provision has been made under standard asset, but interest reversal has happened above the line.
Okay. Thank you so much, sir. So that was all from my side.
Thank you. Any participants who would like to ask a question at this time, they may please press star and 1. The next question is from the line of Jay Mondra. Please go ahead.
Yeah, hi sir. Sir, on savings account, in savings account in particular, so we have seen a decent progress, right? From if I see YOY also there is some 8 to 10,000 crores increase in the absolute amount. Mm-hmm. Could you share some insight as to some portion of this would be coming from as we penetrate more into LIC, let us say LIC float or LIC agent or something linked to LIC business. So could you share as to what could this number be, savings account, potentially if you were to maybe over 1 year, 2 years, if you were to penetrate fully. So that is the question number 1, sir.
Okay.
So as far as the saving bank, which is more stable kind of deposit, this has been growing year on year. If you would have seen the trajectory, you will find. So this is one reason is the stable business model, this sustainable business model, and the growth has been growing. One reason more for this year is also partly due to the synergies with LICs where it has happened, but it is not the major contributor presently. but yet it's a part of one of the challenge points.
In fact, just to further explain, this LIC, their collection accounts and all these things, whether accounts they are keeping, they are having in current account. So it is basically LIC's agents, LIC's employees, and some other persons. So that way the balance is not very significant, but now it has started growing actually. So around 334 crore only balance is there, but the accounts are being opened in future time, coming time it will increase substantially. But as of now, it is basically the core deposits which our branches have been able to open the accounts of our new customers, and the increase in balances through VIP, that demat accounts we open, the 3-in-1 accounts. So that we have been targeting the 3-in-1 accounts. So there also some traction has happened. So it's a combination of all factors, not only LIC, but LIC, yes, it will increase in going forward.
Right. So, sir, so the other way to ask is what percentage or how much we have already penetrated out of the synergy benefits in terms of CASA from LIC. So let us say if we had envisaged maybe additional 100 rupee will come from LIC synergies, how much has already come and how much probably will come over the next 2-3 years?
Now it's basically like, the LIC, that synergies, we are working on that, and there are various, parts. One is that cash management part, then basically collecting their insurance premium, then bank assurance premium, their, providing POS machines to them, card business is there. So many action points are there. And as far as this CASA, current account float is there, so that of course, it varies because it's a current account float, but it varies from 2,000 to 3,000 crore. So it will be there available. So slowly, some of the accounts are getting shifted from other banks to our bank also, but slowly it is increasing. And there is a tremendous scope there available. So we are targeting one by one those accounts.
Okay. Sure. And a related question to that is, sir, we have around, let's say, 30,000 crores of bulk deposit, right? And the loan growth, of course, is, in consolidation mode on an overall basis. And our CD ratio is still, if I were to calculate, is around 60%, less than 60%. So what is the purpose of having this bulk deposit? Why not make it zero? And you can, at least whatever comes would be a saving. Is that the right way, or there is something more than this? Because we are of course running at low CD ratio, and you have the bulk deposit which is stable, or which is not falling that much.
There are two ways I will like to reply. One is this bulk deposits, about 2 years back it was around in the range of 60,000 crores. So we have already reduced the bulk deposit level to 28,000 crores. So all high cost deposits are getting repaid. Some old deposits are continuing, but mainly that whenever it comes for renewal, that high deposits, cost deposits are being paid. Now, what you are saying is that CASA ratio, this CD ratio of 60% is in regards to net advances. If we take the gross advances, the CD ratio will be around more than 71.15. But I agree with you. So the bulk deposits which we are getting now is at much lower rates actually. So these are not costly deposits. That is how we have been able to reduce our cost of deposits, which was earlier in the range of, as on 30th September, if I tell you. So 30th cost of deposit, it was 5.41 as on September 18. Now it has come down to 4.18. So these are basically low cost deposits, so which give us some interest benefit also. So that way there. But yes, we are managing the funds in such a way that ultimately it should add to our net interest income. So finally it is there. But once we are out of PCA, then once the CD ratio starts growing, so then the profitability will further improve.
Right. Sure. And sir, if you can just talk about more on the recovery expected over the next 6 to 9 months.
First I will talk about the current quarter. This when last time we had met, I indicated that 4,000 to 4,500 crore recovery we will be making for the full year. So already around 2,800 crore recovery through various, some partly it has in technical write-off, partly it has gone to interest and partly cash recovery. So around 2,800 crore we have already made. And now in the current quarter also, because some of the big advances are in pipeline, so we are expecting around 1,000 to 1,200. So roughly around the recovery for the full year will be in the range of 4,000 or more than 4,000 crore. So this quarter we will be expecting a recovery of 1,000 to 1,200. Now as coming to next year, again because now this year the NCLT recovery was quite less. In fact, not many cases were resolved through NCLT. So because of this COVID situation, and we were mainly going for OTS and some assignment of debt, negotiated settlement. So next year, hopefully, this NCLT process will start again, and again we will be expecting recovery in the same range, around 4,000 crore next year also. And since our the provision coverage ratio is 97%. So major recovery, whatever is coming, is contributing towards our either provision reversal or profit.
Right. And sir, the last thing, sir, how should one look at the credit cost for FY22? Because you have such a huge coverage, and as recovery pan out, you will be getting provision right back. So when you say, I think you had mentioned some 0.65 to 7% ROA. What is the credit cost or the provisioning expenses in absolute amount that you are factoring in? Because I think because the very fact that you have so much huge coverage, there could be significant provision right back. So what is your internal assessment on the provisioning cost for FY22?
Yeah, you are right actually that since we have 97%, so there will be provision reversal and there will be right back. Now you see, if for the current year, if you see, first quarter our credit cost was negative because of course that provision reversal. The second quarter it was 0.27 only, and this quarter 0.57. So the current quarter, because of this pro forma and some other, because COVID impact will be seen. Q3 we have already seen, but it was well under control. Q4 also there may be either on the same line. So we are expecting that for the full year as a whole, the credit cost will be much below 2% level. So we will be keeping below 2. So but next year onwards, basically like overall credit cost, as you say, may go to negative also, or maybe quite less. But for the the slippages part, whatever reversal is there, that we are keeping separate. For slippages part, our target will be that exclusively we will be keeping below 1.5%.
So 1.5% slippages, right?
Slippage is also 1.5%. Credit cost for that also around roughly say 1.5%.
Sir, I think you are, if the slippages are 1.5% and there is nothing to provide on the existing book, in fact, you will be getting some reversal. And on new slippages, you will not go to the 90% PCR, right? You will go 40, 50, 60%. Then credit cost, shouldn't it be much lower? Or is there something else?
No, you are right. Actually, that is what 1.5% when I am taking is for that particular. So whatever provision reversal is there, that will be over and above. So okay. That net credit cost may be, I fully agree with you, maybe negative also, or maybe very low.
Right.
So that we are keeping it separate.
Right. Great, sir. Yeah, so those were my questions. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Bhavik Shah for closing comments. Thank you, and over to you, Bhavik.
On behalf of Bhartiya Janata Securities, we thank IDBI Bank Management for giving us the opportunity to host the call. Thank you, everyone, and have a good day. May I request the MD, sir, to kindly give the closing comments on this quarter?
So thank you very much for connecting the call, and like as I was telling in the press meet also, after this Q4 results, by that time, I hope this COVID uncertainties will go, and this with the coming of vaccine also, the things will improve. So we will try to meet personally with all the analysts, because so far we have not met personally. So we'll be personally there, and we'll like to clarify the position. So thank you very much for attending the call, and you may disconnect.